Chief Operating Officer of ICA. I welcome everyone to this inaugural ICA members monthly credit webinar. On the ICA team, I want to mention that we have Philomena, who is in charge of subscription, and then as well as Mrs. Raji, the group coordinating executive assistant, who is also on the platform. At this juncture, I will want to hand over to the registrar and the CEO of Institute of Credit Administration, Professor Chris Onalo. So I will ask Prof to take over from here. Prof, for your remarks, sir. Hello, Prof, if you can hear me, go ahead for your remarks, sir.
Good morning, Tolu.
Good morning, Prof.
Good to see your face again. Good morning, Francis. Good morning, Dr. Dwayne. Okay.
Good morning, Prof. You're welcome, sir.
Thank you. Yes. What is Edwin saying now? Are you saying anything, Edwin?
Yes, I've actually welcomed our members to this inaugural session of our ICA members monthly credit. I've also introduced Philomena, who is actually in charge of our subscription department, and then Mrs. Raji, the group coordinating executive assistant. So I'll hand over to you for your opening remark and subsequent takeoff. Over to you, sir.
Okay, good morning, everyone, members of the Institute of Credit Administration, our distinguished FICA, MICA, and AICA. It's my pleasure to welcome all of you to this first edition of our Institute monthly credit management update webinar. I can see some all of you faces there. I can see Kingsley. Kingsley, good morning to you. Kingsley is joining us all the way from the United Kingdom.
Good morning.
Yeah. Anne, Amana, good morning.
Good morning.
Amara, good morning.
Good morning, sir.
Yes. Can all of you unmute, please, so that we can hear you? Jinadu, good morning.
Good morning, sir.
Francis, Okefu, good morning. Okay, all right. We have designed this program to last for about 45 minutes, and we have communicated our intent to all the members that we are looking to come your way this way with a view to adding more to the services that we offer to all our members. We intend to make these as regular as possible, and it is going to hopefully be holding on the 15th of every month, and we'll be looking at topical industry credit management issues, economic issues, opportunities, whispering, celebration of professional strides, keeping abreast of the trends. As you all know, credit management is bigger than all of us. We are talking about economic system. as opposed to other professionals' traditions that keep them very strict to what it is. I don't want to mention other professional titles, but credit management deals with the entire of economic spectrum, and because it encompasses everybody. Whether you're taking credit right now, you're taking credit before, or you're giving credit right now, or you're giving credit before, be it trade credit, be it financial credit, be it consumer credit, be it political credit, whatever form of credit, if you have not taken at all, even down to mama put, which is in the class of consumer credit, against your regular income. A lady was talking to me yesterday, one of our members on phone, we're chatting, and she said, I've had to buy a couple of dresses because I love them, I collected them, and I needed to attend the big party. I needed to collect that cloth, and then against my income, which will be paid to me at the end of the month. And we just joke about it. And I said, we were talking about, that's consumer credit. And she said, yes, So that means that everybody lives the life of take it this morning, pay back in the evening. And so credit is all around us, and we insist that any member of the Institute of Credit Administration should be able to share this professional idea to everybody. And for us as a country, we are looking to quickly help the people in custody of governance to move in the economy from cash-based credit system. And because we know that the opportunity inherent in credit system outweighs the practice of keeping cash or conducting your life transaction on the basis of cash availability with you. If we do that, we'll not be able to create wealth. If we do that, we'll not be able to create jobs, for people. So every month we look forward to hosting this event, and today is the maiden edition. We have a distinguished. There's noise coming from somewhere.
Okay. Perhaps the moderator can just mute everyone else.
Okay.
The speaker will need to unmute himself so that we can hear.
Hello, Prof. You may have to unmute yourself so we can hear you.
Go on again. Okay. Can you hear me?
Yeah, we can hear you now.
Okay. All right. Thank you very much. So we have a very interesting situation on our hands, because the program is intended to enrich our knowledge, to globalize our knowledge, to make us in tune with the reality. Credit management is a practical thing. There is nothing, theoretical about it. And then it puts us on the front burner of challenging by way of a subtle idea, polite, submission of idea, and insisting that that idea is still true. So credit affects all of us, and for this reason, we are introducing this platform with a view to getting ourselves closer to the happenings in the economy, to the happenings around the world, to the happenings within the governance system, to the happenings within your profession. So it is the mother of all professions. So today we have a distinguished speaker who is also a fellow of the Institute of Credit Administration, and she is the business development manager of a prime bank in Lagos, and she's been very familiar with the impact of credit economy in the marketplace, given her position as business development manager with a bank in Lagos here. And she is going to look at the impact of COVID-19 on borrowers. We've had a lot of palliatives announced by the government and some other institutions that are very critical to the economic life of the country, and some are still not able to come up with certain palliative other than the one given by the government. In other emerging economies, beyond I'm not talking about the developed economy, but in other emerging economies, there's also a constant effort by institutional, support, apart from cash donation, material donation to deal with the pandemic. People still look around, particularly the financial service sector in some other emerging economies, trying to say those who have borrowed money and have been paying interest for a very long time before the emergence of the COVID, we could look at the portfolio and take some measure of risks, share in the losses and all sorts. We don't seem to have had similar things from the Nigerian situation. People are still, especially the SMEs, and in fact, all business institutions are contending with the high cost of having to service, their loan obligation at this point in time, and it's affecting businesses generally, and it's worse hit when you consider the SME. Do we expect banks to lock down interest? That is to say, interest waiving, or do we expect banks to say, okay, we give some terminal period? For example, you could say for the next 3, 4, 5, 6 months, there's going to be an elongation of moratorium should be shot by the next 4, 5, 6 weeks or months, so that there will be no activity on that account, or we shut down the interest or we reduce the interest rate significantly during this period until business fully resumes, so that activity can bounce back and people can now go about their businesses and all that, given that this is a new normal. So our speaker today is going to, within 20, 25 minutes, look at this scenario and see if there's any justification or no justification at all to any reason. And as listeners, you are going to ask questions, you are going to make contributions. The rest of our time will be engaging in asking questions and making contributions in such a way that at the end of this program, we'll probably come up with a document that we can circulate to key places that, look, this is what we resolve from this event. So it is my pleasure, without taking much of our time further, it is my pleasure to ask our distinguished speaker today, very, very prolific, very intellectual, very professional, to Olufal, let me get the name right away. Tolu, I'd like to call her Tolu. All right, so Alfolaju, yeah, Alfolaju, Tolu Alfolaju, FICA, to take the platform right now. Thank you very much.
Thank you very much. I hope you can all hear me.
Yes, we can.
Okay, thank you very much. Good morning, everyone. My distinguished colleagues and members of the Institute. My name is Tolu Alfolaju. I'm a banker. And just as the Prof has said, I just want to share with you my thoughts on one of the topical issues that concerns the world today, and that's about the impact of COVID-19 on small businesses, on borrowers in particular. I have a few slides I'm going to share, about 9 or 10 slides. Let me try and see if I can. Sorry, host, can you enable my screen sharing, please?
Okay.
Ibrahim, get IT guy, enable her, please.
Okay, so while that is being done, just to go ahead and say that it's one of the topical issues across the world today. It's very important because we're all affected, and I'll just take some time out to share my thoughts. I'm encouraging contributions from the listening audience. it's something I should all be talking about, especially as regards being members of the institute and credit administration and management as they were. So I don't expect to do more than 15, 20, 25 minutes at most, because I'm sure we're all very busy people and we'd like to get back to our various work. Okay, so am I enabled now, please?
IT.
Yeah, Tolu, go ahead. You can share your screen now. You are enabled.
Okay. Sorry, still showing disabled. Okay.
Are you okay now?
Yes, I'm okay. Just a second.
Okay, fantastic. All right then.
Okay, so can we see that?
Yes.
Yes, we can see that.
Yes,
Okay.
we can see your screen.
All right then.
Let me just, okay, so this is today's topic, impact of COVID-19 on SMEs, particularly the borrowers. So like I said, what I'm going to talk about is something that is not new. We've had various discussions about this, but I think it's important as an institute for us to also be part of the discussion that has been going on. I'm discussing COVID then and now, the impact on COVID on various businesses, the palliatives put forward by the central bank, and then what we need to do going forward. Just a second, please. Just a second. Okay, sorry about that. Okay, so prior to COVID, to be very honest with you, it wasn't exactly business as usual. I mean, we can say that COVID has brought a lot of issues into our economy, into our lives, but then again, before COVID, we still had other issues. And someone mentioned to me recently about the World Health Organization, who have said that the impact of COVID on health, on people's health, is worse where they have underlying conditions. So for us as a country, we had existing underlying conditions as well. So obviously, the impact of COVID will make it a lot much worse. Some of these conditions I've tried to highlight here, the cost of doing business was extremely high for small businesses. They had very little access to external financing or funding. There was scarcity of FX for the purchase of raw materials. And to make things even worse, bringing in goods and services was extremely difficult because of congestion at the port. And then we had COVID-19. Now let's take a second to look at this diagram. You know, this image means a lot to different people for obvious reasons. But then, unfortunately, it's our current reality. And let me just tell a small story. First time I ever saw this image was about 6, 7 years ago. And it was a little squiggly toy. It was in one of my children's party pack. It was one of these rubber toys, squiggly little rubber toys. You know, it was neon colored. It was pink and green. So when you throw it, it becomes green, and when you catch it, it becomes black. It becomes pink. And I thought it was a very nice, I thought it was a very nice toy, something to play with, I had no idea that years down the line, I'm looking at the same image and have, different concerns or different thoughts to share. But COVID-19 has come to stay. And it's what we have seen for now. And the prayer is that in the next couple of months, we shall find some stability in our lives as regards the virus. Now, An article I read a couple of days ago on McKinsey tried to define how COVID-19 has impacted us. And it gave us two broad categories. The first was the impact on our lives, and second, the impact on our livelihood. And I thought that was just apt. Now, as regards the impact on our lives, our personal lives, things like our health has become a concern. Things like our family well-being, our social interactions have been affected. You know, our children are not going to school, they're at home. Some of us who haven't opened textbooks in the last how many years are forced to become lesson teachers for our children. Some of us who are used to hanging out with the boys on Friday night, CGIF, are forced to stay at home. Some of us who enjoy having the odd drink or the odd visits to our elderly loved ones can't do that any longer. COVID has impacted our personal lives and our social lives. Now, how about our businesses? There has also been a very significant impact in that regard. For instance, the aviation sector, flights have been grounded. Those who have been able to fly are doing so based on various arrangements with stakeholders. Schools are locked down, schools are not open. So that has also been affected. People's livelihood has been affected. Teachers' salaries have been reduced because obviously, if you're not paying school fees, how are you getting paid? How are you going to be able to, to pay salaries of the teachers? Sports, for instance, we're watching the Premiership now. The stadiums are empty. People cannot go and watch matches the way they used to. Construction industry has also been affected because it's a cluster-based function. So those who go to the construction areas, you can't do that any longer because of the social impact, social distancing impact on that. Entertainment, Nigeria is a country that is very, very strong on entertainment, on recreation. The cinemas are on lockdown, the clubs, the nightclubs, the bars, the restaurants, hospitality, a lot has happened. And a lot has affected the way people live, the way we work, and also the way we earn a living. Another impact of COVID-19 is the overload of webinars. Now, we all need to be very truthful to ourselves. At least every 5 messages we get these days is about attending some webinar or the other. And the reason is very simple. Because COVID has impacted our lives so much, we have to have discussions about it. So those who cannot go to work, for instance, have to find a way of addressing or reaching out to their customers. Those who ordinarily operate various services have to find a way of reaching out. Those who are impacted have to look for a way of asking for help from other people on how to go about their businesses. Everybody has an opinion. Everybody is having discussions. There are conversations going around across the world. So like I said earlier on, as an institute, it will be nice for us to also be part of that conversation. Now let's bring it home. The reason why we're having this discussion, what is the impact of COVID on SMEs, on small businesses? Now, an SME is a business that maybe the average employee is about less than 250, about 50 to 250. But in the Nigerian space, it's even much more than that. We have the Basira on the streets who sells amala. We have the guys who are pushing things on the trolley to sell on the road. So we have various levels of small businesses. And to be honest with you, this has impacted all their lives. Now, what we see here is that revenues have been impacted. So for instance, a lot of these businesses their sales are from daily operational cash flow. So when your business is temporarily closed due to COVID, you're not making sales, you're not generating cash. So that obviously impacts your revenues. Obviously, that now leads to your ability to generate cash flow, which is obviously largely impaired. FX scarcity. I mentioned that earlier as a symptom of the pre-COVID era. It has gotten worse. There's no FX available now to make payments for overseas transactions. And also for small business, we can't even pay our salaries. We can't pay our workers. We can't pay our employees. Some of our colleagues and mates in other businesses have had their salaries cut by a considerable percentage. We can't afford to pay rent for our shops. Rents are due. Landlords, a lot of landlords get their income from daily rents or monthly rents from some of these businesses. And because they're not getting paid, also affects the landlord's livelihood as well. Now, what this then does is, in the instance where you're a borrowing customer or a borrowing SME, all your loan covenants as regards turnover covenants and all of that are also, affected, and ultimately leads to your inability as an SME to meet your loan obligations. But on the flip side, there are opportunities. Now, I know a lot of us have noticed that there are quite a number of businesses that have sprung up over this COVID era. Logistics is one of them. Everybody has a bike, everybody's delivering because people are not comfortable enough due to the restriction and the risk of exposure to go to various locations. They want to shop for school uniform, for instance. You can't do that. You order it online, and then you get a delivery agent to deliver it for you. Online shops are thriving as well. Food businesses, even though they have closed down the restaurants, but then again, they've been able to find other ways to improve on their takeout and delivery services. And there are other opportunities that are bound. For instance, as I know someone who is in the movie industry, she's a costumer, but because movie production has been shut down, that industry for now has been closed. She now goes into face mask production with cloth, and then she customizes and places your initials or your name on it as well. Now let's go to the palliatives. And for that, I just like to bring about this diagram. Now, as regards palliatives, there is a relationship between the CBN as a regulator, who is the one that develops all the initiatives and palliatives and measures that can assist businesses in this COVID times. Now, as a regulator, they drive these initiatives over to the banks. And the banks, as the operators, are the ones that, on a case-by-case basis, as it were, now begin to deliver these measures and palliatives to the borrowing customers. Now, let's take a look at what these palliatives are. The CBN has, over the last 4 months, based on what is going on and the effect on the economy, come up with a number of things. The first was the intervention fund for the healthcare sector, 500 billion naira, in form of loans to operators in the healthcare space. So the pharmacies, the hospitals, dental clinics, those who import medical equipment, all of them have been given some form of palliative from the CBN, which involves a long-tenured facility and a single-digit interest rate. In addition to that, the MPR had recently been slashed by 100 basis points to about 12.5%, which also helps lending rates as well for banks to be able to negotiate with their customers as well. Now, in addition to this, the CBN also reduced interest rates for CBN intervention facilities from 9% to 5%. So what that means is all the CBN associated associations or subsidiaries, like the BOI, for instance, who ordinarily had loans for about 9%, they've now been reduced to 5% with longer repayment periods. There's also the 550 billion naira, target facility to businesses in the agri, oil and gas industry who have been affected also by the COVID-19 pandemic. There have also been other forms of forbearance put forward by the CBN, which, like I also mentioned, includes interest rate renegotiation, moratorium extension, loan restructuring, and what have you. There are many others. I mean, the CBN website is very clear. All those details are there for those who would like to look at that. Now let's go to what the banks are saying. Now for the banks, you're able to restructure your customers' loans. Restructuring means prior to now, if you had an overdraft facility for 90 days, and I mean, obviously your ability to repay your facility has been impaired. You're not generating enough cash. You're not selling. You can't generate enough cash flow. So in the last 90-day period, you have made no income whatsoever. So therefore, you can now restructure the borrower's loan, a more convenient repayment period, 6 months, 1 year, just to ensure that repayment is assured and not impaired. Refinancing. So we see that a lot, wherein that maybe still you're not getting your intended restructuring terms or favorable terms from your principal bank. And then you can take that loan to a second bank and have it refinanced, whereby the initial loan is repaid, and then a new loan granted from a new bank under more favorable terms and conditions. The issue of moratorium, So what moratorium really simply means is you have a holiday, either on interest or principal, or on both. Meaning, so over a period of time, agreed period of time, obviously, you don't need to repay your interest or principal. So, for instance, now in the cinema business, my revenues are from takings at the cinema gate, box office takings, concession takings from the popcorn stands. Cinema has, and I have a loan that I'm meant to be paying. Cinema hasn't opened for quite a while. Obviously there's no way I'm going to be able to meet up my repayment. So I can extend my moratorium period for plus another 6 to 9 months, depending when the economy, as it were, is a lot better. Now, pricing negotiation. So, for instance, we have instances whereby I'm supposed to pay some particular fees or interest rates, maybe a quarterly fee, management fee paid quarterly, but obviously I'm not able to generate the income to be able to service or accommodate the fee payment. We can negotiate that with the banks and say, okay, because I'm not able to do, instead of 1%, can I please have it at 0.25% over a further repayment period? And then terms and conditions. Most facilities from banks come with varying terms and conditions, default clauses, turnover covenants, financial covenants, and what have you. Now, because of like I've stressed earlier, the inability to make up this operational cash flow, it will be quite difficult for an organization now to meet up with some of these financial covenants. So these are also part of the things that can be discussed with the banks and can be reviewed. Now, going forward, and this is my last slide, based on all what I have said before, there will be a need for continuous engagement between the banks and their customers. The banks owe it as a duty to their customers to say, you know what, we're not mindful of what is going on. We need to have a discussion around how to ensure that you can meet your loan obligations, how you can service your debt obligations. And the customer also would owe itself that duty to approach the banks and say, hey, these are my figures over a period of time. I have not been able to do anything in the last 3 to 4 months. I have not been able to earn any income or generate any revenue, but I'm owing you X amount of money. How can I go about it? What can we do? How can we spread this repayment? What can you offer? So at the same time, while all these palliatives from the banks have come into play, the banks are also not mindful of the fact that the various risks are there. And we also have to ensure that these risks are fully and adequately mitigated regardless. And I'd also say that this is also an opportunity for banks as well to offer financial advisory services to their clients, to their customers. Number of borrowers in the SME space, as we see today, have that not that much financial know-how in looking at their books and assessing their cash flow. So banks also owe these customers that duty. As financial partners, it's a partnership, it's a relationship to offer these services and say, look, let's go through your books, let's see what you have to offer, let's see where the pain points are, and let's see how we can improve your business and your capacity to repay your loans in the medium to long term. So I hope there are a few questions. I'd like to take questions now or contributions from the audience, if there are any.
Thank you very much, Tolu Afolaju. That was quite brilliant, highly detailed and brief. You have outlined quite a number of underlying acute economic conditions that companies are generally going through, ranging from business outrightly closed down, especially hospitality industry and entertainment. There is continuous revenue dwindling, or in most cases, revenue are not there coming in at all. And then we talk about the pile-up of liabilities, which include the inability to pay salary, to pay rent, to meet up with obligations that has continued to occur. They can't even service the loan and so on and so forth. And we've gone further to provide solutions. Banks should somewhat come down and have a one-on-one meeting to discuss with their various customers and see which area required some sort of intervention. Yes, we have listened to her as well, some of the palliative that the Central Bank of Nigeria rolled out, and under very less stringent conditions. So, distinguished fellows, members, and associates of the Institute of Credit Administration, Tolu has put something on the table. Do you have any questions, any comments? Once again, Tolu, thank you very much. You can fire on, pick your question, or make contribution quickly. Tell us your name, and then you can table your question, or you outrightly submit briefly, less than 1 minute, what comment you have on this very timely and relevant topic. Tolu is still waiting to take your question, and also eagerly waiting to listen to your own comment. Yes, we will take the first shot. Okay,
there's
we'll
a question
endeavor.
from Chris.
Yes.
Chris. Okay, Chris says, can you share the presentation after the call? Yes, I'll share it with the Institute. And the Institute can now share it to all the members.
Yes.
So yes, you can get the presentation.
Yes, thank you very much. Yes, I expect questions from other professionals. Do you expect the bank to elongate the moratorium? Do you expect the bank to quickly call in their customers and negotiate either suspension on the payment of interest or both interest and principal? Come on, it's a very simple and market-driven issue. Everybody is feeling the pinch. Businesses are shut down.
Everybody's feeling the pinch.
Rent. SMEs are going through excruciating pain. What do we have to say? Okay. Do you want me to call your name? Because we must have you. Asuwaju, Adebo, can you tell us something? Please unmute, and then let's hear your voice.
Yeah, thank you. My name is Madibayo. The presentation was quite clear and very interesting, but I'm just looking at the aviation space. How are they going to be able to recover within 1 year? So with the palliative from CBN, for example, it's the 1 year moratorium. After 1 year, what happens? Do you see the aviation sector coming back?
Honestly, yes, let me just pass a quick comment. Thank you, Ashiwaju. That's a very, very valid question. But the truth is, the same way we didn't see this pandemic coming is the same way we don't even know what the effects are going to be going forward. I mean, it won't be fair to say after 1 year things will get better. We're not sure. We can't really say. So like I said in my earlier presentation, it's about constant negotiation, constant engagement. So if the first 1 year does not work, we look at the cash flows, we look at the environment, we look at the operating conditions, and then we now begin to renegotiate. So I think that's the key, because it's very unlikely. It's the cost of ticket sales, for instance, and all of that. The revenue streams are quite immense, and then the way it has been impacted has also been quite significant. So it's very, I'm not sure I'm ready to fly in the next couple of months, regardless of whatever measures are put in place. I've realized the beauty of Zoom. I can have a meeting with anybody anywhere in the world. So why do I need to hop on a plane at short notice and go off to another location? So it's very unlikely that within 1 year that can be done, that can be accomplished. So further negotiations will have to happen. That's the way I see it. Unless you also have other thoughts to that as well.
There's a question that came in from Amara. Amara, would you like to speak, or do you want us to read your text message and give an answer to that? She's saying something about Bank of Industry. Would the Bank of Industry give concession, or they will hold on to implementing the terms that goes with that the portfolio that central bank is pushing out through that institution?
Okay, let me try and, I'm struggling here a bit, please. BOI, even if they have given concessions like other banks did not do the 5% recommended. So are they actually a government organization? Read. Sorry, Amara, I think you might need to just, maybe you might need to unmute yourself and just let us know what the question is. That's a bit confusing.
Yeah. Amara, can you please unmute and give us your voice? Can you unmute, please, Amara? Yeah, that's right.
Okay, so like every other bank, RSSF fund, Blue Sector Support Fund, and the BOI, you expected that they will all go back to the 5% the government had stipulated. But the BOI did not do that. They gave concessions like every other bank based on negotiations as well and moratoriums. And I'm wondering, are they a part of the government institution? Are they not supposed to do what the government has said in respect of that? Because I remember that when Tolu was speaking, she mentioned that BOI was supposed to be part of the people that were supposed to be given 5% interest that has been recommended by the government. If they are not, who are those? Which facilities should have this 5% interest?
Okay, so can I respond to that, please?
Yeah, please.
Okay, so the BOI gives out intervention funds to various sectors. And these funds, these facilities are 9%, single digits. But as part of the government palliatives, one of them was that the rate should be reduced from 9% to 5%. So the BOI is being directed by the CBN to reduce those loans from 9% to 5%. Now, if you say that is not being done, I honestly can't confirm that. I don't work in that space, but I'm very sure that being a government regulated or government assisted institution, that palliative also affects them as well. So I'm very sure, I mean, we need to reconfirm that, really.
All right, sorry, can I add something? BOI is not, I know BOI did not participate in RSSF, so I don't understand. Yeah, those more of intervention funds, they're not part,
exactly.
RSSF are for commercial banks.
Commercial banks.
Intervention funds, not the, I know that RSSF complied because that one is directly from the CBN, but the BOI didn't comply. That's why I'm asking. Are they government organizations? And aside from the BOI and the real sector support funds, which other loans are in this space that the government has slashed to this 5%?
I'm sorry, please, can I cut it? Sorry, how, as you said, BOI did not comply. How are you sure BOI did not comply? How are you so sure about that?
I have a BOI facility, so immediately I heard the announcement. I asked for my 5% cut. They told me no, they are not bound by that.
Your BOI facility, is
Yes.
it an intervention or is it direct BOI lending?
Direct BOI lending.
Okay.
Okay,
So
can you message? Let me message you privately. I'll message you privately now,
All
so we can talk about it.
Okay.
Because I work in BOI, that's why.
Oh, brilliant.
Yes,
So
I'll
I think
message you.
Amara can take advantage of that. Let me also add this question to Lou. You are a banker and I've listened carefully to your question. Do you think that banks as operators in the private sector have done enough in response to the impact of the COVID on SMEs, on businesses generally, apart from the government-owned efforts, which provide intervention funds and all that? What do you think of the fact that those of us who are not banking institutions, do you think the bank has done enough? And if your answer is yes, can you give us a reason? If your answer is no, what do you think should be an expectation from the banking sector?
Oh, okay, let me throw that back at you. Has anybody done enough as regards COVID? Because it's an entire ecosystem. Everybody is affected. Everybody has to look out for each other, regardless of whatever institution you find yourself in. So I would say, has anybody really done enough? Has the government done enough? Has the medical institutions done enough? Has the CBN done enough? Have banks done enough? So that I won't answer that question as regards banks entirely. I'll open it up to the larger ecosystem. I think a lot more can be done for everybody, every member of that ecosystem. A lot more can be done because, like I mentioned earlier, we found ourselves in a time where nobody saw it coming. That's one of my favorite words. Nobody saw this coming. So how to handle it is something that we're all struggling to come up with. So a lot of this is like reactionary measures that people are putting in place and hoping that it will last, or we don't need to extend these measures beyond what people can accommodate, really. So I wouldn't say banks have done enough. I wouldn't say banks have done nothing at all. I would say regardless of whatever institution, a lot more can be done. But also from a lending perspective, we also have to be mindful, like I also mentioned in my presentation, as to how to ensure that we protect all stakeholder interests.
Okay, I speak now as someone that is standing in between two people, the borrower, the lender, the debtor, the creditor. That is the role of the ICA. Now, I'm concerned about about someone out there who is almost losing out his property that he has pledged for the facility. And the moratorium is short, and nobody is saying anything about the moratorium. That look, if 2 weeks later, or three months later, or 2 months later, the facility is not, fully discharged, I am going to take a step towards garnishing maybe your property. So I have a lot of concern being expressed this way, that someone is on the verge of losing his property because of the loan and has not heard from the bank, that the bank will say, okay, I'm going to extend the moratorium by another 6 months or by another 1 year. So don't bother yourself, so that there'll be peace a little bit. Especially that is a common case with the SMEs. I think the bank should be able to quickly move in to assuage that fear. To tell these borrowers, we are going to extend the moratorium and we are going to lock down part of the interest rate, at least for this period. It's not, when I noticed banks were sending in, some 5 million, 10 million, 1 billion to support the federal government to acquire the necessary equipment to combat the COVID-19. I was also thinking that the banks should also look inside and see the strength of their business, which is customers, borrowers, and similarly do things to them that can really give them a bit of comfort. I don't know what, if this, my opinion, as a person standing in between two people, creditors, borrowers, debtors, creditors, borrowers, lenders, is anything justified?
I'm a bit concerned, Prof. You're meant to be on the lending side. You're now moving to the borrower side.
Exactly. Yeah.
But I will throw that back at you, Prof. From a lending perspective, what are your thoughts?
Well, I think from lending perspective, there wouldn't be any significant lending as of now, apart from engaging the government intervention to make sure that it quickly moves to the appropriate channels. I'm not seeing banks giving out fresh loans, and I don't think any institution would like to go for fresh loan unless highly structured, project things like that. Otherwise, I would be more interested in government-induced palliative. I'm happy that, I don't know if the Bank of Industry, Adebayo is there. The interest rate, initially the central bank came up to say there must be guarantor. When I read that line, I laughed and I said, it's the whole purpose is defeated again. If I am going to be a guarantor at this time for someone who is taking the government, promoted facility, then I better go and borrow from the person who is giving me that guarantee. But I think that has been removed. I hope Bank of Industry is not having a request for guarantor as part of the criteria fulfillment to assessing that online facility from the federal government. Is that correct, Adebayo?
The security is still most times BGs from commercial banks and all for loans.
The requirement is a bank guarantee from a commercial bank.
I think most times like we request for BGs from what do you call commercial banks.
Commercial banks.
Yes. So the guarantor one, like you do guarantors, it depends on the category of loans. It depends. It's not, those are like for SMEs and all.
No,
so it's not for
the one that you are distributing for the government palliative. Is there a guarantee? You expect the borrower to provide a guarantor?
The intervention funds?
Yes.
Yeah, but the way the intervention funds have always been there. They've always been there.
No. The COVID intervention palliative from the government.
Oh, no, the COVID interventions they will run like normal loans. The bank guarantees are not. They run like normal loans.
I see.
The palliatives here concerns the tenor and the interest rates. The structure stays the same. So for the regular intervention funds, you require a guarantee from the bank. So the same applies here. But the interest rate and the tenor,
it's now lower. It's the 5% last room.
Okay. Alison, do you have anything to say? Tiwa Alison. Tiwa Alison, can you unmute? Martina, do you have anything to say? Martina, could you please unmute?
Nothing really, because I mixed the half of the presentation because my phone was not connecting. So I'm just listening today.
Oh, okay.
So maybe we're going to have another regrouping to talk about it. But today I do more of listening. Thank you.
Okay. The floor is open. We still have about 10 more minutes. The floor is open.
Hello, sir.
Yeah, Prof. I think Opeyemi asked a question. Opeyemi, please, can you speak if you want, if you are there? Yeah.
Okay. Good afternoon, everyone. Good afternoon, sir. Can you hear me?
Yes. Good afternoon.
Yes, sir. Is more of a comment. I think this is the stage when government needs to be transparent with regards to the fiscal and monetary policies. What I've seen so far is that the pressure is on the banks to restructure loans. But my concern is that these banks are also accountable to their shareholders.
Are you a banker, sir?
No, I am not. I'm just looking at the full picture and where the government is really effective or not. Because most of the loans we have in the economy are usually from the commercial banks. So if the commercial banks are restructuring loans and taking huge losses on interest rate adjustments, where do they pass those costs to? What exactly, apart from the intervention for what exactly is the government doing? I mean, the government should be doing more than they are doing. So putting all the pressures on the bank, I don't think it's the best way to go, because these banks too, if they are not properly managed, can go down. So some banks will give you a reduced rate of maybe 17% from 21%, maybe 16%, but we don't actually know the benchmark. We don't know we don't know how far you can negotiate. So from the borrower's point of view, you don't know how much you can negotiate with your banker. From the lender's point of view, you don't know where they are, getting these losses or money to recover those interest rates they are giving away. So it's just so much. Hello.
Yes, I was going to cut you a bit, Opeyemi, because COVID-19 has brought losses to all businesses. And at the end of the fiscal year, particularly the banking sector you're trying to be speaking in favor, they are not going to be able to post the profit as usual. And if you ask them questions, they'll tell you because of the COVID-19. So all businesses are being impacted negatively. And it is important that both the borrowers and the lender must, especially those that have credit obligation ongoing before the COVID-19 came, should sit together and discuss in a way that some level of intervention can come in there. That is what we are talking about.
Yes, I understand that. My question is just that the government is really not doing anything. This CBN intervention funds is just, I mean, we can't, no business is actually getting, I mean, very few businesses have access to that.
Okay, Tolu, do you want to react to that?
No reaction. His comment is noted.
All right. Okay, who else has anything to say? Is Kingsley trying to say something?
Yes. Well, yes, I've been taking down a lot of notes, and now my book is full of notes. I don't even know where to start. I have a couple of observations that I wanted to make. I'm based here in the UK, and you know, I can talk about some of the things that the UK government is doing as well. You know, that perhaps we can learn from but I can also see that obviously a lot is being done in Nigeria as well, which is good to see on paper. I just want to say that obviously COVID-19 is like has already been said, it's something that affects every business, and its impact is global. You know, so just as the speaker Tolu, you rightly said earlier that, you know, apart from what the CBN is doing, what are other businesses doing as well? And what I've observed here is, as we say, we're all in it together. And so what is important at the moment is survival. Business survival is key, you know, and there's an impact. Obviously, if the CBN is not, you know, banks and financial institutions are not trying to work and collaborate with businesses, then even the bank's survival is at risk. You know, and that's the approach here. Every credit giver at this time, whether financial institutions or non-financial institutions, anyway, it's hard to work with their customers and clients in such a way that, you know, we can all see through this period. Because the truth is, COVID-19 is for a while, and, you know, it's about, can we hang in there? How many businesses can hang in there until this wave is gone? Hopefully, you know, there's the scientists will find a solution to this, and in a couple of months, say 19, maximum 24 months from now, everything should start returning to normal. And so, just like you ended, Tolu, when you made your presentation, I think it's something that's very important, especially for financial institutions now. I'd like to see, you know, banks in Nigeria adopt a new approach, because this exposes the fact that financial institutions, banks, play a significant role in economic growth and economic development, you know. And so apart from just trading for profit, you know, I think this is a time for banks to dig in and come up with more creative services to customers. Like you talked about advisory services. Probably banks may not be able to provide financing in this time, because let's face it, it's a difficult time. And I think that in the areas of financing and boosting business operations, I think the government should definitely take the lead in that. As somebody has rightly said, this is my opinion as well, as somebody has rightly said, the banking model obviously is taking money from surplus ends and giving it to deficit ends, you know, to become productive and make more money for the economy with that. And so we have to be sensitive to the fact that the bank is trading with people's monies and not necessarily with shareholders' funds, you know. So the banks want to make sure that they are protecting the money of of the depositors, of the people whose money they are trading with. So we're not going to see banks.
Welcome.
We're not going to see banks throwing around money and lending now, unless the government, you know, like we said, is putting in place measures to encourage banks to do this. So these are my thoughts in various areas. So firstly, in summary, I would say that banks need to evolve and find, you know, new services to work hand in hand with businesses at this time to ensure that as much as possible there is a reduction in business failures. You know, so moratoriums and things like this will need to constantly be reviewed, because on the science side, people are learning more and more about this disease and its impact, and we cannot tell. Like you said, we are learning about it every day. So there will need to be a continuous review of, you know, palliatives, of working models, of collaborations, and how, you know, we can adjust these so that together we come through this. No doubt some businesses will fail, you know, and the government has to find ways to minimize this. But at the end of the day, financial institutions, like Prof said earlier, the banks will not make profit, or probably will not make as much profit as they have been in the past. So everyone is taking a hit, but we are looking beyond COVID. And so we want to, you know, keep existing businesses, existing relationship for as long as we can support one another, until this is over and hopefully things begin to take a more positive turn. I'm sorry if I sound like I'm just going on a rant.
All right, thank you very much, Kingsley. Franca, do you have anything to say? Franca, are you there?
Good morning, sir.
Good morning.
Good morning, sir. Good morning, everybody.
Go ahead. Go ahead.
I want to commend the Institute for putting this discourse up. And I've been an observer, but my observation at the point when I joined up till now is that we have basically been looking at the formal sectors of the economy. My question is directed to Tolu Aufolaju, and it's to find out what sort of intervention does she expect government and also the profit-making institutions give to the informal sector and to the educational sectors? From my point of view, I'm beginning to think that a level playing field should be given to private educational institutions as far as payment of tax is concerned. If public sectors, educational institutions are not paying tax, I don't expect that the private sector, educational sectors should be paying tax, even if they can do this for a while. So I want to know our thoughts in respect of what should be done for informal sectors and also the educational sectors.
All right,
Okay.
Tolu.
Thank you, Obakayode, I think. Obakayode. Okay, so you had two concerns. The first is about the informal sector. I must agree with you, the informal sector plays a significant part of the economy of the country, because a lot of the businesses that operate there are below a particular threshold. They don't have, most of them don't have that banking or financial acumen that we see in a more formal sector. I can say that the CBN hasn't paid adequate attention to that. What they have done, what the federal government has done though, is to give some sort of grants and whatnot to these households in terms of the, I think it was 1 million naira household grant or something that was done recently. But in terms of the business aspect, exactly, nothing has been done that I'm aware of. I might be wrong. But I think it's also, like you said, something that has to be looked onto. I agree with you as regards that. Now, on the issue of education and private sector education, you said, and taxes.
Yes.
And taxes. Honestly, I can't speak to that. That has to do with the Federal Ministry of Education, I believe, and also the tax bodies as well. There has to be discussion between those two arms of the government. I can't speak to that for now because it's not my space per se.
Okay, thank you very much, Tolu. Obakayode, the private sector educational institutions, those institutions that are owned privately funded, privately owned, they are not universities, they are not polytechnics, they are not anything that has to do with those regulators, NUC, National Board for Technical Education, and all that. I think that subsector of the educational community has a big problem in the country. First of all, I will encourage them to come together, form an association, and start talking about themselves with the view to gaining attention, so that government will be able to say, okay, we still have some people drawing us back to public attention. The Ministry of Education hasn't been able to move around to bring together all institutions that are offering one form of education or the other. I think it's a big problem, and if you are in that sector, I think you have a responsibility to think of how to bring all of such institutions together, and so that they can have their voice, and then ultimately they will have a government recognition.
Obaka, are you in that sector?
Yeah.
You're in that sector.
Are you in that sector? Education?
Yes, it does, except that I'm thinking about the palliative given by government to the households is for the households. I'm talking about informal businesses this time around. The artisans, the mechanics, the dry cleaners, the tailors, and what have you. Many of them need some sort of a palliative that I feel should be given from government and even from banks. Somehow, every bank should find a way of determining which of their customers, okay, that are in the operating informal sectors, right, that could benefit in terms of some palliatives to their businesses, not to their households. So that because we should begin to think of how to ginger all those companies up so that economic activities will begin to take place again once the whole pandemic is over. We shouldn't even wait until the pandemic is over. Many people are doing business one way or the other. Because when you talk about businesses that are essential, almost every business is essential. Some people say telecommunications is essential. What about the battery seller, the spare part seller that sells parts and batteries to the telecommunication giants and the sub-giants? So all of them are very important. We should beginning from now, we should start looking at how every bank will put up some economic programs, some business programs that will help their customers in order to get out of the problems of this pandemic.
Okay, sir. A quick one, Obakayode, there is an intervention from the central bank as well via the NISAL Microfinance Bank to the tune of 50 billion. To the tune of 50, yes, and its eligibility is for household. The people you mentioned, they are the ones that that program is targeting at. The household, artisans, market women, those informal sectors. The loan is targeting at them, and it's to the tune of 50 billion, and the annual interest rate is just 5%. So they can go to the NISAL Microfinance Bank.
NISAL, Nigerian Incentive Space Sharing. Yes. I mentioned that in my presentation.
Exactly, but I'm afraid that the application for that loan accessibility seems to have been closed. That's what I said. But you can go to their website, and then you'll get the detail of that. Next question, please.
Thank you, everybody.
Thank you very much. Thank you. Does anybody have anything else? Any question, any contribution? Dr. Edwin, the Chief Operating Officer of the Institute of Credit, do you want to close us? Thank you very much once again, Tolu.
Thank you,
Dr.
Prof.
Dr.
Yeah.
Can you unmute? Okay.
All right. Thank you so much, Tolu, for that wonderful paper. And thank you, Prof, and everyone who have made significant contributions to this effect. This is, like Prof earlier said when he did in this opening remark, this will be coming up every 15th day of every month, subsequent month. We also use this opportunity again to, encourage our members concerning their subscriptions. Members are actually the assets that the institution actually have, and this is where, we keep running. And of course, as you know very well, this is just the new way of life. Trainings are still going on in case you have need for some training, whether it's an in-house training or maybe these are done basically from now on, through webinar and maybe special arrangements. So it's a good thing that we are starting this way. And I just want to thank everyone, and we hope to come your way once again. Thank you, Tolu, for this wonderful presentation.
Thank you very much.
And thank you, Kingsley, for also logging in all the way from the UK. Thank you, sir.
Thank you so much, everyone. Thank you.
Thank you, everyone. Yes.
Thank you very much. God bless all of you, and goodbye.
All right.